Hello guys, Biotechstocks here. Welcome to this video, and today we're going to talk about some of the plays that just happened in this month, and we have seen actually some tickers that is really tradable. So I'm going to go over them, and I've made some profits into those trades. So other than that, make sure to hit the like button and subscribe. Let's get into the video. So today we have IRMN and XPON. Those are the two, I would say, most profitable trades in the last couple of days. And I also want to include ORIC as well. So those will be the three tickers I'm going to talk about. And the first one, it will be IRMN. So this one, it was not a $3 stock. It's approaching to $3. I was looking to short into this one after a massive push against the pre-market resistance. It turns out that it's trading in tons of volume, but it's not moving up. So it's formed a consolidation around 2.5. Shorted a little bit. Size is not really that much since it didn't trade that much volume. So overall, only made about a couple thousand on this one. I think I sized in anywhere 5,000 shares. So shares were pretty cheap. Then we had the XPON. Now this one is a gap up short. It went up 200% or plus. I was also looking to short after morning open, pushes anywhere between 20 to 30%. It turns out that the first candle is way too aggressive. I think just within the first 30 seconds, stock went to from 3 to 370 and 370 to 2.65. So before I wanted to size it around 3.6, the stock is already around 3, so didn't chase it. Shorted a little bit around 315. Made about overall 30K on this ticker. Not too much, but at least there's something to play off. Also, you can see that the shares has dropped massively compared to 2021. Typically a 200% runner, you are likely to see anywhere between, I would say, 100 million to 200 million volume on intraday level, but right now you're only getting 50 million volume. So the volume has dropped significantly, about 50%, but the pattern is also right, and also the consolidation time has been significantly reduced compared to 2021. So the fading percentage are still looks about right. If the ticker is really close to $2 and the fading percentage gets affected by the stock price. If the stock is too cheap, that means shareholders can buy more shares with their account, and since it's a low float, so it's not going to fade 75% from the top, especially whenever you see a ticker price it's just a little bit above $2. So this is something that you want to pay attention to. If you are shorting a ticker that's around $3, especially on the intraday level, the fading percentage will get affected by the current stock price. The closer they're going to approach on the $2 level, that means the stock is unlikely to fade in the upcoming days or in the upcoming afternoon. So that'll be for XPON. Then we have ORIC. This is the ticker that happened yesterday, which is Thursday. Same pattern. After our runner came back down, then come back up, test the pre-market resistance. This is only up about 50%. As you can see that Biotech's ticker holds way better compared to a ticker that is not a biotech. So two charts looks very similar. One's more expensive, one's not. After I run up, come back down, test the pre-market resistance again, consolidate and break down. You can see ORIC, even though it's more expensive, that means I trapped more backorders into this push, but it didn't fade all the way down. So you can see the difference between technology sector and biotech sector, because the risk reward and statistics is completely different compared to other sectors. Also, biotech is pretty much not tradable. Majority of the time their float and market cap are above 40 million and 300 million. So the bigger the market cap is, the better the fundamental of the stock will be, not including the meme stocks. Those are the tickers that happened last week. Then I want to also go over some of the potential play into the next week. This is HTGM that happened I think it was 2 days ago, and he did a reverse split. So I want to make a video about reverse split specifically in the future, but you can see that it closed around 3, so up about 6, up about 100%. When the stock does a reverse split, historical resistance pretty much all gets canceled, and you cannot use the historical support or resistance. So make sure your chart is adjusted to the split level, and when it does a split, it reduces market cap and also reduces its float. That means it change its float, make it a micro float, easier to pump, and once they pump up again, then they do an offering, increase the float, then they do the same thing, they reverse splits again, and they just rise and repeat. So those are the reverse split method, but I think HTGM will have some potential upside into the next week, and hopefully can produce a decent opportunities. The flow is relatively low, so you have to be really careful. But for nano float stocks, always wait at least 1 day. So a first green day, always avoid that if the volume is building from the bottom, since these type of tickers are very difficult to manage your risk and hard to trade. So that will be pretty much all for this recap. If you do have any questions, please leave a comment below. Other than that, thank you very much for watching. I will see you guys in the next one.